the stock market perception here and the real economy down here. Now, the question for investors is, when does that converge? Because it will. I always say reality always wins.
Many people remember what the 2008 financial crisis unleashed on the world. Life drastically changed as companies collapsed, house prices plunged, millions lost their jobs, and many more lost their investments. Jim Rickards warns that the 2008 financial crash is the tip of the iceberg compared to the coming economic meltdown. Please continue watching as I tell you how experts predict the subsequent economic turmoil might unfold. Previous economic catastrophes. The world is not a stranger to devastating financial disasters. The new millennium has had its share of economic downturns. The 2008 crisis is undoubtedly still fresh in your mind. The most significant global economic collapse before 2008 had been the Great Recession of 1929. Western governments thought the neoliberal economic system was the answer to economic crashes. The economic model favored minimal regulation, giving financial institutions almost unfettered discretion to do whatever they wanted.
This is going to be part of what throws the economy into severe recession. They're raising rates and inflation's coming down. But what they don't know is, are interest rates coming down because they're raising rates, or have they already hit the terminal rate and it's coming down on its own and they just don't know it? And that's a big deal, because if they're at the terminal rate and they just don't know it and they keep tightening, which they are going to over-tighten, probably already have.
Leaders ignored all telltale signs of trouble because the system was too strong to fail. That is what everyone within the financial community thought, but they were dead wrong. The deregulation lowered lending standards, thus making credit more available and cheaper. The result was the creation of a housing bubble as more people acquired mortgages. Things started going south when the bubble burst and house prices plummeted. Banks with billions in now worthless mortgage holdings had no option but to declare bankruptcy or request government bailouts. The crisis soon spread to other sectors like wildfire. The first days of the crisis hardly triggered panic in the financial community. People were calm, thinking the turbulence would soon be over. Little did they know that the tsunami was coming. It was not until big banks started collapsing that the reality would sink in. Lehman Brothers and Bear Stearns were the precursors of the economic earthquake that would devastate the global economy for 12 months. Financial experts thought the two financial institutions were too big to fail. Governments worldwide had to fork out trillions of dollars to save companies from bankruptcy. It was necessary to do this to protect the global economic system from total ruin. Companies that were not lucky enough to receive bailout money went under. Ordinary people like you and me would bear the brunt of the crash. Imagine sleeping a millionaire and waking up poor. It may sound like a nightmare, but it is the reality of life for many people who lost their jobs, homes, and savings. Some lost the three of them. The global economy had hardly recovered from the 2008 crash when COVID-19 struck a little more than a decade later.
Go through financial crashes and panics, and you come out the other side and the world is different. Yeah, that could happen.
The health crisis triggered economic fallout, which reverberated across the globe. I need not explain more about how the pandemic stopped global economic activity, led to massive layoffs, and brought financial hardships. Many economies have not yet bounced back from the lows witnessed during the crisis. It will take a long time before we get back to pre-pandemic levels. Just as the world was getting back on its feet, Russia unleashed its military on Ukraine. The invasion was the latest blow to the shaky global economy. Food and energy prices have increased as a result of the war. Prices of other commodities have also shot up. You may wonder how a faraway conflict is to blame for worsening inflation in your country. The answer is that geopolitics, financial markets, and commodity prices are intertwined. Ukraine and Russia are top suppliers of food and energy products. The war between the two former Soviet republics has left a hole in the global economy. The previous crises have gotten us to where we are today. The cost of living is at an all-time high. Prices of essential commodities continue to increase. Many people are feeling the pinch of worsening financial conditions. Several big banks have already gone under. The financial community is alarmed by the dramatic collapse of Signature Bank, Silicon Valley Bank, and First Republic Bank.
How big of a problem is this? Is this a systemic problem? Are we going to see more bank failures up ahead? And what will be the end result of all of this?
Well, the way bear markets start or economic problems start, they usually start small, someplace where people aren't watching. A few weeks later, a few months later, they get bigger and bigger, and then eventually it's on the evening news, and everybody knows there's a problem. This is not quite to that stage yet, but no, it's another sign that eventually we're going to have another recession, which we've always had. And it's probably going to be very bad because there's so much debt in the system now.
Could this be a sign of another financial trouble? The world is not ready for another economic crash. However, some financial experts warn that the global economy is not out of the woods. Jim Rickards is one of them. He is candid that the worst is yet to come. The investment banker predicts the coming economic failure will be worse than the 2008 crash by far. You might not want to hear this, but you cannot dismiss his predictions just like that. It is essential to listen to what experts have to say. It is the only way you better prepare yourself to avoid any surprises. Let's dissect Jim Rickards' prediction about the next catastrophic financial crisis. How the next crisis would look like. Some financial experts argue that another economic meltdown is unlikely because the housing market is stable and resilient. However, Jim Rickards argues that people are looking for the wrong signals. He explains that this confusion results from the wrong diagnosis of the previous economic failure. As I explained earlier in the video, the official cause of the 2008 crash was the subprime house loans. The housing bubble might have accelerated the crisis. However, the excessive tightening of the monetary policy before the onset of the economic failure was the real culprit. In response to the collapse of the housing market, banks have raised lending standards for mortgage loans since 2009. More requirements of qualification for house loans may have sealed the loophole that resulted in massive defaults in the years preceding the 2008 turmoil. However, Jim Rickards advises shifting our focus to commercial real estate, where trouble is brewing. Office property prices are falling because of remoting working arrangements many firms introduced during the pandemic. Vacancies are on the rise. As a result, property owners are defaulting more than ever before. Once again, financial institutions are increasingly holding on to worthless properties as collaterals. Do you see history repeating itself? Jim Rickards certainly sees all the warning signals of a looming meltdown. The next crisis will unfold similarly to the last. The distress in the housing sector will spiral to other industries. They say, once bitten, twice shy. People will demand their money at the first breaking news of financial woes. People will line up at banks for hours or days waiting to withdraw their money. As you can predict, banks will not be able to meet the overwhelming withdrawal demands. Investors will be desperate to dispose of their assets. Companies with strong fundamentals, such as Apple, will not be spared. The result will be more panic and more economic turmoil. We have seen all this before during the 2008 collapse.
We had a problem in 2008 because of too much debt. But just as you know, the debt has skyrocketed since 2008. So the next time we have a problem, it's going to be very, very, very bad.
So what makes the coming market failure worse than the previous one? Jim Rickards explains that it is because central banks won't be able to rescue banks through bailouts. He predicts the level of bailouts banks will need would be too massive for central banks to raise. He is right in his prediction. Look at the previous bailouts we have had. They have been getting bigger and bigger. Where will the Federal Reserve get the money to bail out collapsing banks? You may be thinking of the IMF. That's brilliant. However, Jim Rickards is pessimistic that the financial agency will be of any help because of the lengthy process. More significantly, at least 85% of member states must approve any bailout. Do you think all member states of the BRICS group would readily support bailing out the Federal Reserve? I highly doubt it. Now you can see how the next crisis could be the last nail to the coffin of the global financial system as we know it today. The aftermath. The aftermath of the subsequent economic failure looks gloomy. Jim Rickards emphasizes that it will not be the end of the world. The world will continue to exist. However, we can agree that the world will not be the same again. How would you react if your bank told you that you could not get your money out? You would not be too happy about it. Now imagine if every depositor cannot access their money. A few months ago, people in Lebanon had to break into banks to get their money. You will most likely witness similar scenes in many countries. This lawlessness would pave the way for a total break of the social order. Looters and vigilantes will take advantage of the situation to wreak havoc in big cities and towns. People will take to the streets demanding the resignation of their leaders. We may witness more coups in the aftermath of the next financial crash than at any other time. Essential commodities will become as scarce as snow in Miami. Black markets will thrive and become the lifeline for many people. To survive, people will turn to semi-barter trade to get what they need, as currencies would be worthless. The next crisis will result in the total collapse of civilization as we know it.
What's going on, as I just described. Keep some cash, be ready for a severe correction. If I'm right about the fundamental economy, and obviously I think I am, there's a lot to back that up, we're not going to get fabulous growth. And this, by the way, gets to the title of the book, The New Great Depression. Depressions are much more subjective. People say, well, if that's a recession, then a depression must be 20 quarters of declining GDP. And that's not the definition. You can have growth in a depression.
The fate of the American hegemony and the US dollar. The US has been dictating global affairs for as long as we can remember. There are clear signs that the curtain for American hegemony is closing. At the same time, calls to ditch the US dollar as the standard currency are louder than ever before. There is no doubt that the next financial crash will spell doom to the US dollar. At that time, developing countries still on the dollar system would have no choice but to leave. The collapse of the dollar and other leading currencies will force governments to revert to the gold standard. The increased demand for gold would result in price increases because of scarcity of the precious metal. According to Jim Rickards, the price of gold would reach $10,000 per ounce. Undoubtedly, the next economic crash will end the US dominance in the global financial system. Jim Rickards foresees this as the likely outcome. The biggest threat to the US global dominance is the rise of BRICS. The bloc is growing with more countries joining. Iran is among the countries that have recently become members. The goal of the bloc is to provide a parallel system, with China and Russia being the main drivers. The recent expansion makes BRICS even more formidable. The entry of Iran completes what Jim Rickards calls the axis of gold because Beijing, Moscow, and Tehran have been amassing massive amounts of gold. It will be possible for the three countries to establish an alternative financial system to replace the worthless US dollar. Gold will be the standard currency in the new system, with blockchain technology powering it. Successful replacement of America would give China, Russia, and Iran more leverage in global affairs. It would be impossible for Western powers to punish other countries through sanctions. Would this be a good or a bad thing? Please let us know in the comments section below. There is no timeline for when the subsequent financial collapse will happen. It may happen soon or take decades to come. It may never occur in your lifetime. We cannot give a specific date when to expect a catastrophe. That is the nature of disasters. They come unannounced. However, the trajectory of the global economy points to the inevitability of another crash. One takeaway from the 2007-2008 economic meltdown is that any shocks in the global economy threaten your investments and livelihood. It is essential to watch out for the warning signs to make better investment decisions. I hope you have enjoyed watching this video and learned many things about economic futurism. Please support this channel for more great content by liking this video and subscribing to our channel. Please let us know what you think about the subject of this video in the comments section below. Also, turn on the notifications to get alerts of our latest uploads. You can click here to watch another fantastic video. Thanks for watching.